Good morning and welcome everyone to the Money Control live stream. Well, it looks like we are in for another muted start on the Lal Street this morning. But if yesterday was any indication, it might not be much to worry about. Yesterday we saw that we had a very weak start, but then the market bounced back from the 20-day DMA and ended up sharply higher. If you look at the cues for today, the Nifty futures on the XGX are indicating another gap down opening for the Nifty with about 50 to 60 points cut coming in when the opening bell is struck. If you look at Wall Street ended on a largely mixed to weak note, with caution now, being very much palpable ahead of the Jackson Hole summit later this week, where the US Federal Reserve Chief Jerome Powell is expected to speak about what would be the rate hike trajectory for the central bank going ahead. And lastly, if you look at one bit of bullishness that came out yesterday, or the good news that came out yesterday, is that FPIs made a comeback. They were net buyers of Indian equities, while DIIs were a small amount of net selling from their end. But clearly, FPIs were the one who poked up the market yesterday, and bulls will be hoping that that continues. Now, joining me today is the senior consulting editor of Money Control, N. Mahalakshmi, and also my boss. Hi, ML. How are you?
Hi, CJ. Great to be with you this morning.
Well, Emil, I, of course, you always, keep a very keen hawk eye on the market all the time and also its participants. So just wanted to gather some thoughts from you with respect to the topsy-turvy nature that we have seen in the markets over the entirety of 2022, to be honest. And how does that affect the psyche and the investment decisions going ahead?
So, since you do this show on a daily basis, you see it as topsy-turvy, but if you just distance yourself a little bit, the market has pretty much played to the script since last year.
Right.
You had a correction from October to June. You had a pullback to that correction, and most predictions, most technical analysts would have told you that 17,800 was really the level to watch out for. A little, the market went a little, 200 points higher than that. And now there is a pullback. So far, I think the market has pretty much played to the script. And there were, of course, because of the sharp pullback, there were a lot of questions and debates on whether this was start of a new bull rally or anything. I don't think that was to be.
Right.
And if anything, the Monday, Tuesday move has definitely dispelled that notion that was just a pullback, and we are still in a continuing bear phase, if I am allowed to use that term. So this year, if you see the rest of the year, I would say the market should continue to consolidate with a downward bias. I think the important thing out here, CJ, is to recognize the fact that inflation is a structural issue. It's not something that was here for a few months and it's going away. I think the market needs to appreciate the fact that investors need to appreciate the fact that we have to live with both recession and inflation in the US for quite some time now, till it gets really reined in. But there is no, if you ask me, is there a time bomb sitting out there? Like many people say, there should be, because it was such a steep rally post-COVID, there should also be a humongous correction. I don't believe a humongous correction is going to be.
Yeah, I mean, sometimes these things turn out to be very anticlimactic.
Yeah, so it might be a bit of an anticlimax. People are waiting and all set for a big fall, and the big fall may not come. That is in the nature of the markets. I don't see a very big fall coming, but I don't see any reason why the market should pull back from here on.
Right.
So it should be a slow period. Next 1 or 2 years, I would say, is going to be like this. It should be sharp ups based on, say, commodity prices or some trigger thereof, and a down move. So there will be a consolidating market.
Yeah, clearly. I mean, if you look at it from October 2021 to now August, end of August, we're reaching the end of August. Clearly, if you were somebody who left the market in October and rejoined the market in August, you would have thought that nothing has really changed, right? In that sense, of course, the market has seen a very, very long consolidation of almost now 10 months getting into it. But Emil, I wanted to understand how, as a fund manager, what do fund managers do in a situation like this when there is so much of volatility, there's so much of news flow coming in? What do you do with your portfolio? Do you stick or do you twist in this sort of a situation?
CJ, India is not new to this kind of market. I mean, we have had not just 10 months, but 10 years of consolidating markets in the past, right?
Right.
And there have been a lot of fund managers who beat the market during that time period. I think it's actually a very good market to make money in a safe way. So, in this period, even from October to now, if you really saw, the Nifty has probably not moved anywhere, but you would still find stocks that have rallied very much. M&M, I mean, autos were
Yes.
completely shunned last year. They're back in the reckoning now. They're in fact hitting new highs. Public sector banks was such a pariah some time back. Now it's
Yeah.
made a humongous comeback. So this is in the nature of markets where something gets completely ignored and dumped. They will make a resurgence. And I think from India's perspective, I mean, we also here have to make a slight distinction between US markets and India. And definitely, if there is going to be a sharp a drawdown out there, it's not that we are going to be insulated, but there is no reason really for us to get very pressurized about inflation unless crude sees a sharp comeback. And I think that is the only thing that I would worry about. From a portfolio perspective, I think it's fairly clear to me there are still pockets of undervaluation. It could be public sector banks, in fact, banking as a whole, because
Yeah.
wherever the growth happens, it should be able to capture some part of that growth. So we don't know right now whether this demand resurgence is going to, how long it will continue. For sure, because there was so much abstinence during the COVID period, you're seeing all this revenge play out. I'm sure everybody is expecting a good festive season as well. But we don't know whether how long that consumption is going to continue beyond next 1 or 2 quarters.
Great.
The way to play it, just keep a hawk eye on stocks specifically, see where you're getting undervaluation, play it for smaller gains. Don't look at runaway stock prices, because that's not going to happen.
Well, great, ML. I mean, clearly the two takeaways are that the market is in a consolidation phase with a lot of volatility involved. And lastly, if you're an investor, be stock specific instead of trying to chase the next new thing, right, ML?
Correct.
Great,
Absolutely.
great. Thank you so much for joining in. Thank you so much for joining into the show, and hope to see you soon.
My pleasure. My pleasure, CJ.
Well, guys, moving on. Next, let's take a look at some of the stocks that would be buzzing in trade today. And of course, the one name that will come at the top of the list today would be New Delhi Television Network, NDT, New Delhi Television, basically NDTV. Yesterday, news came out that Adani Group has acquired about 29%, a little over 29% stake in the company. Now, they have done it by converting some of the warrants that they held in the promoter company of NDTV into an equity stake of almost 100%. So that gives Adani an indirect control over NDTV of about 29% stake. But because it is more than 25%, Adani Group is now required to make an open offer to acquire another 26%. Now, this is where it will get a little interesting. That is because the open offer price for NDTV is about 294 rupees at this point of time that Adani Group is offering, while the current stock price is somewhere in the range of about 370 to 375. So clearly, it's a very steep discount of about 21% that Adani Group is offering, and it'll be interesting to see whether that disappoints investors a little bit, given the fact that the stock has seen quite a substantial run up in the past 1 year. If you look at the performance from about September 2021 till August now, it has more than doubled in stock price. Of course, a lot of it has been driven by the company's strong earnings performance. Remember, NDTV has been trying to pivot itself away from not only just being a television news network, but also becoming a big play in the digital media space. And I think one of the major reasons why Adani Group has also been keen to acquire this asset is clearly that it wants to add to its digital media plays. Remember, Adani Group had not so long ago acquired a almost substantial stake in Quintillion Media as well. So clearly, Adani Group's acquisition spree continues, but I think there could be a little bit of disappointment as far as NDTV is concerned because of the sharp discount that we have seen in the open offer that has been offered. Moving on, the next stock on my radar today would be Tata Motors. Now, the company recently has come out with a positive update on its JLR business, or the JLR subsidiary. Now, clearly the update is around, of course, demand and the semiconductor issue. Semiconductor, of course, has been one issue that has been, the shortage of semiconductors basically has been one issue that has been plaguing the company for the past 1.5, 2 years now. But they are expecting some bit of easing there, easing of pressure there. They're expecting the situation to improve in the second half, and that should allow JLR to meet some of the pending demand orders that it has on its book at this point of time. Also, let's not forget that China has now clearly moving towards completely reopening its economy after the pandemic or the last wave that we saw over the past 6 months that had closed down the economy. Now, China accounts for almost 25 to 30% of JLR's volume. So clearly, if that economy comes back, that could lead to another bounce back in demand. Lastly, if you look at the CV space as well, there also Tata Motors is enjoying quite a good ride recently. It has won a lot of e-bus orders from various state governments in India, and I think that is another space in the CV space where the outlook for the stock is clearly becoming bullish. Now, if Santo were here, he would point to the fact that the company has now posted losses for 6 consecutive quarters, despite all the rosy outlook for the India business and the optimism that has been displayed for JLR. Apart from that, of course, let's not forget that a major part of the re-rating in Tata Motors that has happened over the past 2.5 years has also been driven because of its EV play. Now, in India at this point of time, Tata Motors is the kingpin when it comes to the EV four-wheeler space. Now, M&M also is now trying to aggressively get into that space, and Santo would have been of the opinion that M&M probably would become the preferred play in the EV space. But my counter argument here would be that M&M is clearly 2.5 years or more behind where Tata Motors is at the point of time. M&M's first EV might come into the market in 2024. By that time, I would expect Tata Motors to have gazumped even more market share in the EV space. So that is Tata Motors. The next stock on my radar today would be ITDC. Now, this is an interesting stock from the travel sector. It seems like there are a lot of movement happening from the government side on this company, and clearly a market is of the opinion that it could be another turnaround story in the travel space. Now, why is that? It's because government has now invited bids to probably divest the Ashoka hotel that the company owns in New Delhi. Clearly, at this point of time, a lot of roadshows have happened as far as Ashoka hotel is concerned, and the demand at this point of time for investors looks quite interesting. Before we move on to the next stock, let's quickly take a check on the market and how we have had the opening at this point of time. Clearly, it looks like a negative opening, but not so much. The Nifty is down only about 0.1% at this point of time, so near the flat line, not much of a concern, but the market breadth is clearly very, very strong. About 1,300 stocks rising on the NSE for about 472 stocks that have declined. The mid-cap space is doing well. The Nifty Mid-Cap 100 index is higher by 0.1%. And if you look at the Nifty Small Cap, that is where the big money is being made right now, guys. Nifty Small Cap 100 index is higher by about 0.5%. So clearly a very good opening. M&M again among the gainers. Yesterday also it ended up as among the top gainers on the index on the Nifty 50, and today also the stock is higher by about 0.5%. So a very, very solid start for the market. Hopefully the benchmark indices will also turn into the green, and clearly as I speak, Sensex is now in the green territory. So that is a good start for the bulls, given what the sort of cues that we had earlier. Moving on, my last stock on my radar, or the last stock on my radar today, would be TeamLease Services. Now, why? I'm a little bearish on this stock, largely because of the fact that the stock has seen a very good recovery over the past few months. There's been more than 40% recovery in the stock, and clearly it seems to me that going ahead, the upside could be a little limited. Now, I say that is because the job market, especially in the IT sector, seems to be slowing down. Now, that could be a little bit of a dampener as far as TeamLease is concerned, given that it provides a lot of HR services and hiring services. Overall, if you look at other pockets of the economy, there have been some amount of slowdown, although managements have been indicating that they want to probably continue the pace of hiring. But it will be interesting to see how it goes in the second half of the year. Yes, the e-commerce space is something that is picking up. We have had reports coming in that e-commerce players are looking to hire a lot of delivery people ahead of the festive season because they're expecting a very strong festive season this year. But overall, the job market still remains quite fragmented because of the pandemic, and it'll be interesting to see if TeamLease can sustain the performance that it has seen over the past few quarters. Overall, Santo's argument here would be that the company has given a very, very strong guidance. If you look at the guidance for the company, they're guiding for about 20 to 25% growth in general staffing, about 15 to 20% growth in specialized staffing over the next few quarters. So the outlook from the management side appears quite strong. But if you look at the latest developments that are happening in some of the sectors like IT, it makes you a little cautious on where the company is headed. Overall, they are expecting operating margins also to return to pre-COVID levels by the end of this fiscal year or FY23. So a very interesting stock, probably not one of the most high, one of the fastest growing stock out there, given the fact that we are still seeing very, very good opportunities in the small cap space, but probably a stock to keep in your radar in terms of how the situation develops. Well, with that, let's wrap up the show. It has, we have seen a very decent start in the market. The benchmark index is a little flattish, but the broader market is where all the gains are being made. Please post your feedback on the comment section below. Please keep on liking our videos, and of course, keep clicking on the following us on the social media links that you can see at the bottom of your screen at this point of time. We will catch you again live at 3 p.m. with all the day's action and of course commentary. Till then, have a great trading day.